Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst. We have the broader market knocking on the door of all-time highs. We're going to go in-depth into Tesla, trading this past week and what I'm looking at going forward. And of course, the metals with significant volatility. Silver breakout attempt, but stomped down by the end of the day. Let's look at the charts. In addition to the Tesla trade, we're going to check in on quantum names, Chinese names like Baba, and of course the commodities like oil, natural gas. Appreciate any likes and shares. I never ask for them, but it makes a big difference. All right, so SPY. Something to note with the broader market. So right now we have SPY and QQQ hitting all-time highs if you adjust for the dividend. And generally I keep adjustments for dividends on charts, but I also know, okay, SPY I have no resistance to look at, but I go to futures. And there's also some distinct differences with our futures charts as well. So it's important to be using ES and NQ, and you do have to pay for that real-time data on TradingView. But you can see, again, look at how many resistance levels we have here. There's still a very clear resistance zone for the S&P 500 that we are battling. And if you look at the NASDAQ, oftentimes I'll use the futures NAS 100 USD because it's free, and I want everybody to be looking at, able to be looking at the same thing. You can see it's hitting all-time highs, but again, if you look at NQ, there is still work to do. So again, this has to do with whether you're adjusting for dividends on the ETFs, the contract rollovers of futures, but I would be suggesting NQ and ES from here on out because that's where the walls still remain of resistance. Overall, bulls win the week. We have this tightening daily range that started with an FOMC reaction and just tightened up, and the short-term range has broken bull. We've had 3 Sundays in a row with a gap down on futures, and every Monday has been more and more aggressive buying. This was a Monday that took a while before the dip was bought. This Monday dip was bought a bit sooner, and this Monday dip was bought instantly on the gap down. We then held that support and broke short-term resistance. So bulls have the upper hand. If you want to keep it simple, go off the low of last Monday. The simple statement is the bulls have complete control if the low of this past, or actually that's Sunday, but if the low of that holds, bulls keep complete control. If that breaks, we need to step back and reassess. Things have shifted. So the burden is on bears. And the price action that I saw on Monday had me shift my probabilities. Again, looking at the sideways range, I'm always open that we can break both directions, bull or bear. And I have a game plan for both. But I wrote I'm 60-40 that we're going to break bull because of the prolonged trends and the fact that we've been in a bull market for 2 years. And then on Monday, I watched the price action and said, okay, I'm now shifting to 70-30 that we break bull. And that led to me making a Tesla trade too soon. And we'll talk about that in just a moment. But I'm bull unless something shifts. And so we're just knocking on the door of this resistance. And if we get daily consolidation to start next week, we need to see that higher low form. It is worth noting that volume is extremely low in this market right now. SPY on Monday and Friday, those are the 2 lowest volume days, including half-day holidays, in years. What does that mean? For me, that just means trade less as a day trader. Be less active, pump the brakes, be more patient, be more picky. Because less volume means less volatility. Look at the range on SPY on Friday heading into the holiday weekend. And there's less opportunity there. The pie is smaller, which means it's harder for me to get my piece of the pie. That said, I learned in the last Trump presidency, 2016-17, that you do not need volume to go up in the indices. It can be very low volume and just grind up in blue sky for months in a slow grind. And I suggest going back and looking at 2016, 2017, the daily volume on SPY and QQQ and what it did during those 2 years, because that drastically shifted how I view markets and how I view volume. I was taught that bulls need volume to have conviction. And I learned that is not the case for the indices. It is the case for individual names. Semiconductors, NASDAQ. So NASDAQ, again, same deal. There's a little resistance left. The low of last week is the most important level. And bulls are leading the way here. Sideways equilibrium, broke bull. If we do see some consolidation, bulls would love to hold this back test, this little double top. If that's the case, that'll keep conviction high. Burden on bears. Otherwise, we're assuming bulls. SMH. So the weekly chart is just a sideways chop fest, right? We haven't done anything in this sector for 4 months. And, we broke resistance with no follow through. We broke support with no follow through. Generally, when that happens, I scout a megaphone And so again, just some visual guides. I draw this on the weekly. And, neither of these lines is going to be relevant in the near term, but we'll keep an eye on the bigger picture. And we had a sideways range that got tight where we had our high, we had our low, high, higher low, lower high, higher low in the same day. Battle, 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 hold support, break. And so now we're in gap fill. There's a gap fill up to 260.62. NVDA, which got hit hard from the DeepSeek news, is recovering, right? We had often you will see, again, trading, Joey and I, Chart Guys Joey, we're starting work on an advanced trading course. And I shouldn't have said that because it's going to take months over the spring and summer. I'm not going to be putting in a ton of time to it. But one of the nuances of trading is breaking support or resistance with zero follow through, and that being reversal signal. And we're certainly going to be touching on that. But NVDA, just a perfect example, breaks support. The sector does not. And that marks the bottom. And that just stops out anybody using that low clear support level right before things turn around. So support is now 129.08. The gap fill is 141.88. And bulls back in the driver's seat. We will eventually have to confirm a weekly uptrend, which we haven't done for a while, but certainly a DeepSeek recovery. We can say that much. So Tesla, we're going to talk a little bit more in depth here. So Tesla, again, the premise and the setup here is that Tesla was one of my best swing trades from 2024. And again, I didn't nail the top or the bottom, but I saw the clear bull action and I saw the response to the election and things like that. So I made my entry on this daily consolidation. I sold partial from a day trade position to get my break even under 309. And then I just let the swing position play out. And then I started taking profit when things got extreme. And I sold a few times, 2 or 3 times. It ended up with my average sell being 440. And I'm happy with that. Again, didn't nail the top. We went 10% plus higher than that, but also sold into strength. And now I've got the capital to reload into weakness. And so I'm looking for Tesla monthly higher low. And the reason that I'm interested in reloading this position is because a monthly higher low is the most likely scenario. And we just hit daily oversold conditions. And in the strongest trends, it's a back burner, right? Coming from all-time highs, daily oversold can mark a monthly higher low. And the semiconductors did that last year. Semiconductors back here, this was your monthly higher low in April on daily oversold and continuation to all-time highs from there. So ideally, that's what I'm positioning for. Is that going to play out? I have no idea. But I am now positioned extremely well for that. And I'll go over a bit more details. So first off, I missed my first attempt, swing and a miss. My first attempt was on Monday. And I saw Monday, again, I saw the broader market showing me we're likely going to break bull. Previously, I said to Tesla, I'm waiting for I want to see daily oversold to get interested here because there was relative weakness. The country's trying to specific tariffs with Tesla and blah, blah, blah. All those headlines are going on. And so I wanted to be a bit patient. The broader market told me, make a little attempt. And so, again, because, the last thing I want to do is miss a move on Tesla just because I'm waiting for something and it doesn't come to me. So what I ended up doing is entering half of the swing position that I sold at 440. So I nibbled back. It's due to my shift in probabilities of the broader market breaking bull after today's trading, and I will stop if 350 breaks. And I'll average up at some point, and I ended up stopping out. So the reason I entered was because we had a big enough bounce on Monday where I felt an hourly higher low was the most likely scenario. And I was wrong. We had a headline in the afternoon about Musk making a bid for OpenAI, and investors didn't like that because he's distracted, whatever. But I stopped out. And I'm glad I stopped out. The lesson here is, okay, so that's an $8 loss, 358 to 350. I stop out for $8 on a half position. So we'll call it $4 stop out on a full position. My swing trade that I had just saw was, $140 on a full position. So I was risking $4 of my 140 previous profit. Give it an attempt. So I stop out, and then that tells me be patient. And honestly, it probably prevented me, that little stop out prevented me from trying to go aggressive on a bounce on Tuesday because I said, nope, I stopped out. I've got to be real picky now. That was my attempt to not be picky, and now I have to be picky. And so we then got the setup that I wanted, where it was a 12-hour super stack, And you can look on our search on our website what the super stack is if you don't know what it is, but it essentially tells us when all time frames, the 12-hour, the 4-hour, the hourly, the 30-minute, 15-minute, 5-minute, are all at extremes together. And it happened during Tuesday's trading, and then it happened again in extended hours. And so I wanted a gap down open on Wednesday to go long, but I knew that we had CPI, and so that was a factor. And so I woke up Wednesday morning at 7 a.m. I entered. That's when my broker Fidelity opens. I entered right as this candle got going, and it wasn't a full position. It wasn't everything that I wanted because CPI was coming and because it was extended hours that I was trading in. So Tesla morning, I don't often trade from my phone, but I was in bed, grabbed the position on the phone. So I was in at 325.45. I was out half at 329. My break even is now 321s. And again, staying smaller, it's extended hours, CPI is coming, so being a bit conservative. So now I've got a half position at 321, and I traded a lot that day. I bought this dip on the CPI reaction in the 327s, flip a little bit. I bought the open, flip a little bit. And so I ended up where I have a full swing position with a break even under 315 from my day trading activities, just with the goal of just, give me a percent, just knocking down my cost basis of the swing trade. And so again, the takeaway, I don't want this video to be too long, but the takeaway is by stopping out with a small loss, I want to know when I'm wrong as soon as possible. I was wrong within 3 hours of my first attempt. Small loss, give me the capital back to be able to buy. I ended up buying 15% cheaper because I stopped out and respected my stop. And so now, again, I've got a full position with a 315 break even, and I'm up $49 on a full position, which is $98 on a half position. So I lost $8 on a half position, and I'm now up $98 on a half. What would be a half position? Just showing the comparison by stopping out small and then opening the possibility to another trade. So, you hear it all the time, obviously, stop out of your losers quick, let your winners run. But also, all that said, I'm well prepared for another leg down. Why am I prepared for another leg down? Because if you go back and look historically, when Tesla hits an all-time high and then hits first daily oversold conditions, there are examples where we get a 20% bounce initially, but we then fade to lower lows. So here was an example. This is your first daily oversold, all-time high. First daily oversold, 20% bounce, lower low. And then again, chopping around and even another lower low. So I'm very aware that we may drop down to lower lows. And I will trim a little bit more. And I will have my half position break even under 300. So I can just trade around it. And then I'll add back half maybe if we get a bear break with no follow through like NVDA. I don't know how it's going to play out, but I know that I'm going to give this a shot for that monthly high or low. Another thing to note is the relative strength of Tesla compared to QQQ has been such a great guide. I'm watching QQQ and Tesla in this past week, knowing that the broader market is not doing a whole lot. I'm just focused on one name because Tesla has all the volatility that I need, and so that's where my focus is. And if you look at the relative weakness, it was just weaker than QQQ all day Monday, certainly all day Tuesday. Then on the bounce day Wednesday, it was stronger than QQQ all day. And then Thursday, it was stronger all day. And then Friday, it was weaker all day again. And it just gives really good clues about control of the day because it has been glaringly obvious when it is both stronger and weaker all of last week. And it's just a good guide to be keeping an eye on. And that's going to be another section of the advanced trading course is utilizing correlations for clues and things like that. But it's been very helpful for me watching Tesla and QQQ trade together. So we'll see how it plays out. We have to confirm a daily uptrend. Anything under 380.55 is just a lower high. If we confirm the daily uptrend, we'll zoom out to the weekly. We'll scout a weekly lower high. So just one step at a time. It's going to take a while. But again, my style of trading, get comfortable, get your break even, where you're in complete control of the trade, and then see if it can play out. And I will be day trading around it as well. XLF. So I like, when I look at a chart, I like knowing how things will play out in the sense that, again, not saying this is going to play out or making predictions. I can say that if the S&P 500 is going to reject from the all-time high, XLF will have to be a head and shoulders. There's probably no other way that that plays out. And so I'm going to be watching this next week. Does this head and shoulders shape up? If we break 51.75 on Tuesday, we're not trading Monday with the holiday, then the daily lower high is set and that right shoulder is trying to form. The most important support for me is 50.92. If this confirms as a head and shoulders, we'll pretty much have a double top on the S&P 500 all-time highs to be paying attention to. And if this support level doesn't break, then the S&P 500 is going to follow through with new all-time highs. It's really that simple. And yes, this is just one piece of the puzzle. Obviously, what the NASDAQ is doing is going to be key. And we've had great rotation. Friday in the chat room in the morning, I typed in, because again, we're still seeing the inverse action, as I've talked about many times, XLF and XLV on one side, QQQ and SMH on the other side, and they're very often inverse to each other, specifically on the morning. First hour of trading, first half hour of trading. But Friday morning, I typed XLF, XLV, XLE, energy, all at the high of the day, QQQ at the low. Okay. And then by the end of the day, I typed the exact opposite. I said QQQ, SMH up at the high of the day, XLF, XLV, XLE, all at the low of the day. And that's just a flip-flop of the relationship from the morning to the afternoon, just showing that rotation. And again, when that rotation is happening, we know a number of things. Number one, we're not going to see a ton of volatility in the broader market because it's literally a tug of war where they're balancing each other out. And that balancing has led to a bull market consistently over the last year and a half, 2 years, but it's not a raging breakout. You're not going to raging breakout unless all the sectors are hitting highs together. And you're not going to see any kind of significant weakness in the broader market unless all those sectors are hitting the lows together. So anytime there's that tug of war going on, it's almost like, I don't need to be on high alert because the market is doing its normal thing. Anytime it's the opposite, all at the highs or all at the lows, it's time to pay attention because that's been happening far more infrequently. I'd say that happens, in either direction, all those major sectors, XLF, XLV, QQQ, at the highs or the lows together, less than 10% of the days. So we know to pay attention when it's happening. And when it's not happening, it's okay, business as usual. But I'm watching XLF closely. XLV, we're going to have a long video today. Now, IWM, I don't care at all what it's doing. It's not doing anything. I'm not trading it. I'm watching this range, okay? Support zone, 2 holds, resistance zone, 4 or 5 rejections. We're right in the middle. Nothing changes if we're in this sideways range. I don't even need to look at it. When it breaks bull or breaks bear, okay, that'll be a little puzzle piece of information that I use for my broader market analysis. But as long as it's sideways, I don't care. XLV, weekly consolidation underway. We knew this was inevitable. We've had a nice 6+ week bounce with no weekly trend change. If these bulls are going to take back over, we have to confirm a weekly inverse head and shoulders. So we're looking for a weekly higher low is the most likely scenario. There's a lot of space for it to form. Anything above 135.13. We're going to be keeping an eye out on what's the retracement size on the pullback. And again, bigger picture, same thing. If we're going to see any kind of meaningful weakness in the S&P 500, XLV will have to be a monthly head and shoulders. And I am definitely watching for it this year because as I've been posting in our, talked about in the long-term pattern video that I did to start the year, this is the weakest yearly candle that healthcare has seen in a very long time, over a decade. And the bulls are hoping for an inside bar to try and negate it, but there is a possibility for a monthly head and shoulders that we need to be keeping an eye on. And so again, if the S&P 500 is going to see any kind of meaningful weakness, this will have to confirm. It'll have to be one of the major pieces of the puzzle that is shaping up. So I'm definitely keeping an eye on it. And, I may look to short XLV as a hedge. I'm going to do a video, a YouTube video specifically about hedging and how I do that in the near term. But maybe I'll choose XLV as part of that hedge here sooner rather than later. But again, this can go 2 ways. We can see 50% plus retracement, and then that monthly head and shoulders gains probability, or we see 40% retracement and a healthy higher low, and we confirm the weekly uptrend and look back towards the all-time highs. So again, there's going to be a fork in the road for the healthcare sector, and it's going to do one of those 2 things. And we're going to be watching closely February into March, which of those 2 is most likely. All right, some of the other names here. So Quantum, I like the RGTI clarity. We've got our all-time high, the low of the massive dump, the lower high after a 200% bounce. And now we're scouting a weekly higher low. And again, it's doing exactly what we were looking for it to do before the top was hit. we know we're going to top out, we know we're going to drop hard, and we know we're going to tighten up because that is the most likely scenario, and that is how these euphoria names go. And so that's exactly what we've got. And now we scout the weekly high or low with plenty of space for it, anything above 595, and then we're going to watch for this tightening range to break in March potentially, and that's going to then increase volatility again. And again, you know, my trading of RGTI here, here, and here, I've traded it 100 times more, 400 times more, whatever, than I've traded it the last 3 weeks. There's still trading opportunity, there's still volatility, it's just not comparable to what it was. And so RGTI, we had a bear break of 1180 that had a decent little bit of follow through. We now have a triple top at 1225 the last 3 days. That's a key level to be watching. But again, I just love the clarity of the weekly chart. And an aggressive bull is going to be trying to position for a weekly high or low. Again, my style of trading is do a little day trading, try and get a swing position for a weekly high or low, and have a thesis where you say that's either the weekly high or low or I'm wrong. You use that level as a stop. And then if the weekly equilibrium breaks bull, you've got a great position. I'm not doing that just yet. That may be a game plan that I look for in the next week or two to try and position for it, but that remains to be seen. QBTS has had some relative strength recently. It had a 2-day equilibrium that broke bull with no follow through on Friday. 666 was a tough resistance. $6 is a clear support now, the psychological level, but again, still a tightening range here and a little bit of relative strength there. IONQ also tightening up, testing support. Again, weekly perspective. Its tight weekly range is close to breaking bear, but keeping an eye on quantum to get volatility going again this spring, but still some more tightening to go. All right, Chinese names, big time move. Baba, very impressive. Was talking about Baba looking for a monthly high or low, which we got, and a long-term basing pattern. I call this the balancing scales strategy, and it's really just the way that tops and bottoms can shape up on charts. And I got a video. Again, look up balancing scales chart guys on our website. But that's what this is doing. It's just years of, again, so supply and demand. Just imagine the old-fashioned scales. And so you've got demand outweighing supply, and we hit the all-time high, and then supply outweighing demand for a very long time. And then for 2 years, it's the market finding a fair value. And we've got this balancing, getting tighter, tighter, tighter. Okay, this is a fair value down here around $80, $90. And now the scales have flipped again, where demand is outweighing supply. And it's a bit of an inverse head and shoulders type of pattern, but the level was in the 120s here. Look at this wall. I called it the Great Wall of China Resistance because you've topped out here 1, 2, 3 distinct times over a 2-year period. And now we're breaking out above it. And that's a great sign for bulls. So if you're not in a position at this point, aggressive bulls are going to be looking for a daily high or low, watching for hourly oversold conditions. Patient bulls are going to be waiting for a weekly high or low to make an entry. And, bigger picture target here, there's a lot of space to work with. This is the 6-month chart. So let's see if these bulls can make their way up to the mid-100s. Definitely a bit extended in the short term, so you're not chasing this move. And got to keep an eye on when earnings are. TradingView is really bad at knowing when Chinese companies' earnings are. But, KWeb, all Chinese names are trying to make this move. KWeb has not broken bull yet to multiple year highs. A little bit of a laggard at this point. Something to keep an eye on. But impressive overall. A couple other trades we're watching into this week. HIMS has been a great bull. All-time highs, surging. Hourly back burner, right? We know a daily high or low is going to be the most likely scenario. We're watching for hourly oversold conditions to market. So again, I just know maybe this is a trade I'm going to take next week. It's on my list. I know to be watching for it. Maybe it shapes up how I want it to. Maybe it doesn't. But that's how I establish a game plan for the week ahead. And it's HIMS and it's TEM. This is that Nancy Pelosi play. Of course, it V-shapes to all-time highs. But same deal. Very strong breakout. Tons of space for the daily high or low. We scout hourly oversold to mark a daily high or low. And again, we use our back burner indicator to keep an eye on it. So we don't have to keep an eye on it the whole time it's trading. But those are 2 lead bull trades where we will be scouting daily high or low entries. Commodities. Dollar. So dollar weekly has confirmed the downtrend. Now we zoom out to the monthly. And again, we know a monthly high or low compared to 115 is the most likely scenario. We're going to watch what is the retracement size, how much bear follow through do we get? And so the daily downtrend is going to be our guide. Lower high, lower low. So next bounce, anything under 108.53 is just a lower high. And so that's a good thing for the metals overall. Although again, they haven't really needed the help. Gold has been surging ahead, double top on gold. So if we drop down and break 28.64, then we lose the daily uptrend, which means zoom out and we'll scout weekly consolidation. Again, weekly consolidation is inevitable here. If you look at how many weeks, how many times has gold given us a weekly stair step with a higher low every single week, 6 weeks in a row? Doesn't happen often. It has happened, and it's gone, 8 weeks in the past. Here was one that was 3, 6, 7, 8, 9 weeks. So it can go more, but most of the time you get to this point and you look for weekly consolidation, and then we'll look for a weekly higher low. Crypto people are also watching this because there's a very distinct inverse relationship where during this breakout, Bitcoin was trading sideways. During gold sideways, this is when Bitcoin broke out to all-time highs. Now Bitcoin's trading sideways again while gold is breaking out. So I'm going to be watching for gold to establish a sideways range, and let's see if Bitcoin breaks out to an all-time high as it's been trading sideways for a couple of months. Just something to keep an eye on. It's nothing I'm basing anything significantly on. Just, again, another little piece of the puzzle. But we'll look for a gold weekly high or low. Silver tried to break out convincingly Friday, gave it all back. And so we have a new resistance level now. If we were to weaken significantly, silver is a possible monthly head and shoulders. I don't think it's the most likely scenario, but I am in a swing silver position, and it has been based on the monthly chart, where I had my stop here, and I held through 2 months of consolidation. I did not like doing that, but said monthly EMA 12, monthly uptrend, so I move up my stop to the new monthly higher low. Again, you can be bullish. I'm bull silver. Put on your bear glasses and say, okay, if the bears are going to take over, again, same thing I just did with XLF. If we're going to weaken in the S&P 500, then this would happen. If we're going to weaken in silver, it would be this bearish pattern. So it won't surprise me. I'll see it shaping up if it is going to shape up. And that's the point of putting on the bull glasses or bear glasses, to counter your bias, to ensure you're not going to get surprised by anything. You're seeing both sides of the playing field. What does this chart look like to a bull? What does this chart look like to a bear? Also watching the miners. GDX has been on a great run. I would love a weekly bull flag here. So this is a multiple year top. This is a 13-year top or something like that. And a double top. And we rejected on Friday. And so I would love, this is a weekly chart. Give me just a little weekly bull flag. Don't retrace more than 40%. And I will make an attempt at a weekly high or low. And I'll say this is either a bull flag or I'm wrong. And I'll have a nearby stop level. And I will make that attempt, because if it is, we're going to break out and see some follow through. Anytime there's a cup and handle forming near an all-time high or a many-year resistance level, I give it an attempt. But again, remains to be seen. We'll see how it shapes up. I just know that I am watching for it. Oil. So I've been in the energy sector. Energy gave us the weekly high or low. So again, I walk up the stop. I had a great entry on the oversold bounce. I sold partial. My break even is under here. Now I walk up and I can't lose. I'm going to have a solid win no matter what. And it's just a weekly equilibrium. After that much volatility, we know that is the most likely scenario. Same as the quantum stocks. So bears are going to try and set a weekly lower high. We'll see if they can do so. Key support is going to be 88.32. I, of course, want to see the bulls get over 92 and try and keep this going and break to all-time highs eventually. But we'll see. And again, this is the whole thing with trading, right? I have no idea the direction this tight range is going to break. I'm positioned where I lose nothing if it breaks bear, and I have a solid win if it breaks bull. That's trading in a nutshell. You don't know what's going to happen. You just position with risk management. Oil is a factor. Oil has not set the weekly high or low yet. I like that. I can say, energy sector has relative strength to oil. Okay, if oil can set a weekly high or low here, then that's definitely going to help the energy sector. But that's a big if. Again, the weekly high or low is certainly the most likely scenario, and we're going to look for oil to give us a tightening range because of its wide range of volatility, but no weekly high or low being set just yet. Let's see if we got a falling wedge shaping up. 12-hour downtrend resistance. Why am I looking for a falling wedge? Because this bear break had zero follow through. I'll keep an eye on that. Again, I'm not going to trade it. I see this price action here. I want to include that in my anchor. All right, let's watch that. 12 hour. If this is a falling wedge, that'll be a good sign for the energy sector. Natural gas still going well. Again, I'm just walking up my stop here as well. First natural gas trade in years. Entered on the right shoulder of this inverse head and shoulders. This is either the high or low, or I'm wrong is how I played it. I had my stop down there. And now just walking up the stop. Now my stop's up here. Can definitely form a weekly lower high compared to 402 and tighten up. We retraced significantly, but I'm going to let this play out. Weekly EMA 12 is a nice guide. I'm either going to stop out as I walk up my stop with weekly higher lows, or we're going to get to my target by breaking out above 446 and getting into some price discovery. Well, wrong term, but getting into a range that we haven't seen in a long time. And again, my target was always 5+. So we'll see if we get it. Again, this kind of position, I know if we're going to put in a long-term bottom, we've got to confirm a monthly uptrend eventually. I don't want to sit through monthly consolidation in this position, which is why I'm walking my stop up, because you have to lose the weekly uptrend to see monthly consolidation. It's going to happen eventually. So if I stop out with a win, that then gives me my capital back, and I can then scout the monthly higher low. Same as I did with Tesla. All right, I'm done talking. It's a long video. 31. If you stuck with me here, congrats. You're putting in the time and the effort. I'm proud of you. Do good things. We'll see you soon.
Wow. Looking good, babe. Look at all them nipples. Wow.